Hey, this is Warren Redlick. I want to show you how the Lucid Motors recent story about raising money and what else is going on, what you're seeing in the media shows that Saudi Arabia owns the US media. Are you ready? Let's go. So here you see I searched for Lucid Motors in Google News, which, Lucid just disclosed that they're going to be doing this shelf registration funding round, whatever they're going to call it. And you see articles from Yahoo Finance, Benzinga, Teslarati, Bloomberg, all these articles, and they missed a big part of the story. Let me show you what they missed. So this is the opening page of the substance of the document from Lucid Motors. And what you see here is there's a paragraph here that talks about them raising $8 billion through a variety of ways. They might raise $8 billion. And then right below that, there's a second paragraph. It talks about them that selling security holders might sell up to 1.189 billion shares of common stock. Lucid has a float of 540 million shares. This is the Saudis. The Saudis own 60.7% of the company, and they are now planning to potentially sell their stock in the company. This is one of the things that people who believe in Lucid have been relying on as well. The Saudis are backstopping the company. Well, it looks like the Saudis are getting out, or they're getting ready to get out. Now, this is over a 3-year period that they may go to the SEC and say, or they may do an announcement that we're doing this. But, number one, you've got your $8 billion funding round, which dilutes existing shareholders. If you're going to issue new shares and you're going to bring in $8 billion over the issuing new shares, you're diluting the value that existing shareholders hold. And then if the Saudis sell 60% of the company, that massively increases the supply of stock on the market, and that's going to massively depress the share price. So this is not great news, but here's the thing. Nobody talked about the second paragraph. Watch this.
EV maker Lucid filing for new offering that would allow it to raise up to $8 billion. Stocks under pressure, down 7%. Phil LeBeau here with the latest. What do we know, Phil?
What we know is that it's going to be an offering that could happen at some point in the future in 3 separate stages.
There's nothing in the offering about 3 separate stages. It's over a 3-year period. There's nothing about 3 separate stages. I didn't see it. I don't know where he got that from. I wonder if anybody read the document. He's not going to mention the second paragraph I talked about. Of course, nobody does, but hear him talking about it. Let's keep going.
Securities remains to be determined. As you mentioned, Lucid saying it's going to raise another $8 billion. But this is basically an offering where they will determine at some point in the future exactly what securities, what the structure will be of the offering, and when it will take place. But they do need that cash as they continue to realize the cost.
He just totally ignores the Saudi money. The Saudis are going to be selling 1.2 billion shares of stock. He totally ignores that. And he dives into the fact that Lucid does need cash. That's true. But how did you miss this part of the story, that the Saudis are going to sell 60% of they've filed to sell up to 60% up, they're up to all their holdings of the company. How did you miss that? I don't understand how a reporter did you read the document? It really looks like he didn't read the document. He got a press release or somebody prepped him for, hey, you're going to say this. Somebody wrote a script. Maybe the Saudis wrote a script for him. Maybe Lucid wrote a script for him, but he didn't do his own analysis. Well, that was CNBC. Let's hear what Yahoo Finance has to say about it. Check this out.
I do view them as a real company. They might raise up to $8 billion over the next 3 years. It
was the Nikola thing.
Over the next 3, I know. You never know what's coming. But look, it's important to know that Lucid ended their most recent quarter with about $3 billion in cash. So right now, they look to be well positioned. But here's a company with cars that are getting critically acclaimed, and to probably meet some of the demand they are seeing for autos that are well over $100,000 a year, they probably do need to raise money. I don't know why the market would be surprised by this, but still looks like they need some more cash.
Well, I mean, think about where they ended this most recent quarter and what they had actually laid out. And they reported, we were just taking a look at the revenue of about $97.3 million on deliveries of 679 vehicles. But it's really what the company had to say. They said that their Q2 revenue, even with all of that in mind, they continue to have a strong balance sheet, closing the quarter with $4.6 billion in cash equivalents, investments.
This is one of those details where he's not being critical. There was an analyst who asked, what are the investments? They didn't answer the question. Yes, they have $3 billion in cash. They claim we have another $1.6 billion in investments, but they wouldn't disclose what the investments were. The CFO was treating it like the investments are equivalent to cash when they're not. If they were equivalent to cash, you would have listed them as cash or cash equivalents. So something hokey there. There's no thoughtful criticism of Lucid's story.
They believe that's sufficient. This says otherwise. This says that they are going to need to take on more cash, and you're seeing the shares react to that, particularly on this additional dilution to whatever extent that may be. It's not necessarily clear what they may, in this potential shelf or this universal shelf registration, what type of shares that this would be, or what type of offering that this would be. It could be common stock. It could include preferred stock as well. And so all of this is basically just rounded out within this shelf registration and gives them the opportunity, once they so do decide to actually move forward with any type of offering, to have it classified as one of those different mechanisms or the other.
What a shock. Lucid Motors filed something that was very unclear about what they're going to do. This is a Lucid Motors story. They're never clear about what they're doing.
This is Lucid, I would say, Brad, before we head off to break, getting ready to go to battle with Tesla.
Getting ready to go to battle with Tesla. They made like 600 cars last quarter. Tesla makes like 600 cars in a couple of days. They're not ready to go to battle with Tesla. They got to make cars. They got to be able to build cars in volume. This has nothing to do with Tesla. Anyway, of course, they missed the big story about the Saudis planning to sell 60% of the stock. Now we're going to go through some articles. Here you can see Forbes magazine, luxury EV startup Lucid looking to raise up to $8 billion to build out operations. Luxury EV startup? They're already, giving them polish on their story, telling them, saying good things about them right in the headline. Lucid Group, a maker of high-end electric sedans, filed a shelf registration to raise as much as $8 billion in multiple offerings that would be used to build out operations as it expands a plant in Arizona and prepares to build a second assembly plant. Oh, and let's throw in a glossy photo of the car that they're not making yet. Their top-end Sapphire can go over 200 miles an hour and cost $249,000. How do you know? This is like vaporware. Who knows what they can do? The Newark, California-based company that began delivering its luxury Air sedan this year. They keep saying luxury. Have you noticed they keep saying luxury? I thought it was post-luxury. They're not following the script well enough. Announced the potential fundraising move, noting that funds would come from offerings of common or preferred shares, warrants, or other types of debt over the next 3 years. Lucid isn't immediately moving forward with a new offering, but wants to have the option to do so. So they filed nothing? There's no criticism. And there's glossy stuff about the car and the recently added 1,200, blah, blah, blah. There's fluff about the company. There's positive stuff about the company. Can you imagine if Tesla got treated like this? Like other automakers, Lucid had headaches launching production owing to global supply chain challenges. You forgot to mention logistics, and expects to deliver between 6,000 and 7,000 EVs this year. Yeah, right. And they're not covering the fact that they came down, right? The CNBC guy, at least he covered that they came down. The company's new Casa Grande, Arizona plant can build up to 34,000 vehicles a year. It can? Right now, they can't build more than 600 a quarter. Adding a second assembly line to handle production of Gravity SUV, we don't know that. We don't know what the second assembly line is for. The expansion will raise the factory's total capacity to 90,000 vehicles per year. That's not enough for Gravity and Lucid Air for what they claim they're going to do. No, it's not enough. Signed an agreement with Saudi Arabia to build a plant there. They'll be able to produce up to 155,000 vehicles a year. Hasn't said what construction that ability. There's like zero criticism. There's zero critical thinking, zero analysis. Oh, shares of Lucid were down. What a shocker. And then we look at, just really quick, two publications that I tend to leave more positive about, Inside EVs and Teslarati in particular. I'm a fan of Teslarati. They didn't read the second paragraph either. And then you've got Barrons. This is Al Root. He's a, generally speaking, a quality journalist. He does an article about how Lucid's downturns might be ending. Really? They're about to dilute their stock massively by $8 billion on a $25 billion market cap. And they're about to let their top shareholders going to sell 60% of their shares, 60% of the ownership of the company, which might have an impact on the share price. But the downturn might be ending. Yeah, okay. Zero criticism, zero critical thinking, zero analysis. I just want to show you what I'm talking about to show you why this matters. You look at this. We're going to skip down and we're just going to look at this language here from the second paragraph. The prospectus also relates to the offer and resale from time to time by the selling security holders named in this prospectus, which is primarily the Saudis, of up to 1.189 billion shares of common stock. A variety of different stock here, but most of it being 1.115 billion shares issued and outstanding shares of common stock. That's the Saudi stock. They own 60.7% of the company. This is the Saudis getting ready to sell out. And nobody noticed this. It's the second paragraph. How did you not, so the question is, did they not read it? Did they Did they deliberately ignore it? Did they just not think? Or are the Saudis paying off all U.S. media? I don't understand. I don't understand how everybody else seems to have missed this story. I think Steve and Mark Ryan got it, and I got it. And as far as I can tell, nobody, the guys who covered Lucid Motors, they didn't cover it. The YouTubers, Lucid Daily or whatever, there's another one, Everyday Finance or something, they missed it. I don't understand how people missed it. It's the second paragraph. Read it. The Saudis are going to sell 1 point some billion shares of stock. They own 60.70% of the company. They're planning to sell out. How did you not cover this? How is nobody covering this? It's because the Saudis own the U.S. media. That's the only explanation I can think of. What do you think? Let me know what you think in the comments below. Check out the t-shirts, the Critical Thinking t-shirt, Discriminate Cogitandi, or the Cybertruck t-shirt or more. ElonBits.com, links in the description below. Please support me on Locals, on Patreon, or as a YouTube channel member. Again, links in the description below. Check out my recent videos. Please subscribe to the channel, and thank you so much for watching.